Up with Andria this time. Um, just a quick review of what's going on in the market to see some movements together, some assets that you want me to cover as well, especially today that we have. It's post inflation and post testimony day, FOMC testimony. So we're gonna see a review of how the dollar, the market responded to a bit of a not a surprise from the inflation in US and the not so hawkish as expected Powell. And also because we have data out right now, the PPI from US. So let me share also the calendar with you. So we'll be on the same side. Where's my calendar? So sharing the calendar with you. I think you can see it. We have the PPI number out just now. It was the next important release after the inflation. Of course, inflation is the spotlight. I mean, nothing really changes. Is not a strong indication. PPI is not as strong indication as inflation, but as we can see over here, the data are out already, and we have a bit in line with expectations. Actually, no, wait a minute. So this is the headline increased slightly from last month's number, excluding food and energy. PPI has increased significantly at 8.3% from 7.7 expected. Jobless claims, unfortunately, rallied higher, 230. So we have an increase in the jobless claims, and that's quite bad actually. Consider also, so the monthly PPI lower, 0.2, even though was a revision higher for November's reading. So a bit of a mixed situation over here. Let me stop sharing and instead let's move on to, let me share my MT4. Guys, it's your session, as I keep saying. Ask me anything you want, okay? I'm here to help. So we're gonna see all the assets that we can analyze together technically and fundamentally wise, the assets that you like. I can see that you adore gold. The most of you adore gold. Hi Andrea, I'm Brady. Yes, you weren't waiting for me. Okay. Yes. So feel free to ask anything you want. So, guys, a bit of so far the PPI are just out. Not significant impact so far, as you can see in dollar in regards to the PPI. However, as I said, the data are a bit mixed. So why is that? Because from the one hand, we had an increase, bit of expectations for the December PPI number, but from the other hand, we had a rise in initial jobless claims, something that is considered to be negative, in regards to the labor market. However, the labor market in US it's significantly strong. It has provided some kind of an improvement and reached pre-pandemic levels. So yeah, but we can see over here a muted reaction so far on the data in the dollar index. So let me just check what's going on. The data out, not significant. So it seems that on the cards remains that after the inflation yesterday, after the raw rise of inflation, along with the rise of PPI today, what is key is that both data that we have seen yesterday and today push the Fed is a reason for the Fed to proceed with the tightening of policy, with the rate hike as soon as March. Okay, so they need to proceed ASAP. Now, Okay, you keep asking questions. Okay, before I asked reply to the questions, I would like, because no one asked about dollar, and that was key since yesterday. Because you're asking about cable, you're asking about dollar ZAR, you're asking about dollar yen, you're asking about gold, but all this that you're asking depend on the dollar index. So give me 5 minutes to explain this major move that we have seen yesterday, which actually impacts and drives the assets that you're trading. Muliari, you don't understand English, you're saying. Please, if you understand me, I will type it as well. We have colleagues of mine. I mean, we are a big team. So contact me or our support team and let me know what kind of language you speak, because we might have an analyst speaking your language. So please, please, please contact me and let me know how to help you. So, guys, you have a lot of currency pairs that you want me to analyze. All of them are dollar crosses. So let's spend 5 minutes to explain a bit the dollar index, because we have seen a big decline yesterday, with the dollar index breaking the 2 months support and extending lower so far today. So this implies that all the other indices, all the dollar crosses, are driven by the weakness of dollar, okay, along with the retreat in treasury yields. This is what is driving the market right now. So we had this big drop yesterday, big sell off on sorry, on dollar index. This is a level, this is a key support level that we have seen being established since beginning of November. So on the inflation data yesterday, we have seen the dollar drifting lower, because it wasn't a surprise. The inflation indeed came higher than expected. We keep having rising inflation, so it's another indication that Fed needs to act, needs to proceed with the rate hikes as soon as possible. So what we have seen is pretty much investors putting crowd their long positions. That's why we have seen this pressure lower, breaking the 94.75. So second day, for a third day in a row to the downside, 94.74. If I zoom out a bit, you can see that it has already reverted. Let me put it in a different color so you can see it. Here we are. You can see that it reversed more than 60% of the gains that we have seen in the very last quarter of 2021. So that's why you need to add a nice trend line over here at 94.50, because a break of 94.50 could open the doors to the 200-day moving average at 93.90, 94 territory, and this range over here that we haven't seen since September, October last year. Okay, so the further weakness of dollar, especially on confirming a close below the 94.50 level, could open the doors on a potential retest of 94 round number, and also our 200-day moving average. Okay, so what that implies that gold might be seen higher, CAD, ZAR, yen that you're asking before, euro, everything will move according to dollar weakness. Okay, so have in mind, you need to check what's going on with the dollar in order to have a clue and and see how the rest of the dollar crosses are moving. So now we have seen a bit of a shift on the medium outlook for dollar to the downside. In regards to the medium term now, which is our daily chart, I would like to put my daily setup on. And now as you can see, not you can, wait a minute, now you can you see that my MACD started turning lower? RSI is at 34, flirting with this oversold barrier. So we have seen we keep seeing actually from November, the dollar index momentum turning lower. Okay, fundamental support for the whole year, a really strong dollar. However, the near term sentiment remains has turned negative. Okay, so near term uh, sentiment has turned negative for the US dollar. This is because of this is because of the markets that they started looking on they already started they have priced in quite from last year. They started pricing the tightening of policy, so that spiked dollar higher. So this might be also some kind of a profit taking condition. So that's why we've seen dollar drifting lower. Now let me take one by one your questions, but before I do, I would like to zoom in once again to see a bit the hourly chart or even the 30-minute chart. And this is the 30 minutes chart. As you can see, the dollar was not changed following the PPI data and the rise of the let me just and the rise of jobless claims. Okay, so not an impact on the dollar from the continuing claim sharply lower, the higher than anticipated initial jobless claims, and the higher than anticipated PPI headlines as well. So not a strong impact, but in near term, sentiment remains negative for dollar. Now, okay, I would like to do equities, but since you keep asking about crosses, I prefer to move on to gold. So since you like it and you want it, so gold. Um, Gold had a nice week actually, and I understand why you want me to cover it. So I will start with the daily chart, okay? And I know that you prefer white background. Um, 1 hour chart. So here we are, gold. So let me also let me put the correct template on, guys. Sorry. So let's start with the daily chart then, okay? We had seen gold okay, here we are. We have seen gold appreciating significantly from the beginning of the week. So you will excuse me for a second to add we need higher standard deviation. Let me try 1.50. That looks quite okay. Yeah, that's even better. So here we are. So we have seen the gold appreciated and had a rebound on the beginning of the week, turning higher, breaking 1800s, extending gains above the 20-day moving average, and posting a high at 1843. So the gold actually appreciated and held like on this high territory that we have seen the last 2 weeks because of the clarity that we have nowadays in regards to the Fed interest rate hike. So as we keep saying, gold is affected by treasury yields. This week that was not the case. Gold indeed is considered as inflationary hedge asset. However, it's very, very sensitive asset with the U.S. Interest rates. So a hike in interest US rates makes non-interest bearing gold less appealing. Okay, so that's why we have seen the gold rising but founding a ceiling. So as you can see, regardless of the rebound, we still have this 18 1830 as a key immediate resistance level for the asset, right? And we keep seeing gold being in the same range as it has been since the mid of June is because even though gold is considered as inflationary hedge, a hike, the possibility of four rate hikes in this year are making the gold, as I said, are making the gold less appealing. Okay, so we have near term push appreciation of gold to the upside because of dollar weakness, but this is this is the case in the near term. In the long term, due to the Fed, due to the central bank policies, the gold expected to continue being under some pressure. You have seen this pressure since the since March 2020, since the pandemic, right? And regardless of the ultra accommodative central banks in 2020, we keep seeing the gold moving lower when we keep seeing dollar being well supported. Okay, so it is what it is. The U.S. inflation expected to remain is expected to remain high, but because we have the odds of a rate hikes are more than 80%, gold might have seen some near-term boost, but in the long term, the sentiment remains under pressure, and that's why gold performance is a way slightly disappointing. Okay, bearing in mind the pretty seismic collapse in the US dollar. So having in mind the collapse of the dollar lately, gold might have performed as one would expect it to, but hasn't really gotten to the 118 40 50 levels highs um, that it could have been due to the rising inflation. So you see that the central banks are keeping gold lower. So a summary of what I'm telling you about gold is that regardless that inflation remains elevated, and this is something that should support the gold, because the central banks are taking action, then we have some kind of a ceiling on gold. So from the technical perspective, the 1831, and more precisely 1835, which is my daily Bollinger Band, remains a key resistance level for the asset. Okay, so as long as it fails to move above it, then the asset remains under pressure, and this might cause another pullback to the downside for gold, because you can see it lacks of momentum, it lacks of sentiment. RSI is neutral, MACD is neutral. So regardless of this boost, it looks that this rally has run out of steam and we might see a pullback. But we need to wait and see, because for the time being, it's stuck. It's failing to extend gains higher. Now, intraday. Here we are, intraday. turning lower so far today since the beginning of the day, actually retesting the 50 period moving average in my 1 hour chart. Let me put my scalping setup. Here we have, here it is. Sorry, turning lower, and I don't have my 50 here, so I'll put it right now. You can see that it retests for a second time in a row the 50 period moving average, turned lower, but it's consolidating, so lack of direction currently. So the range of the no so it's in a, somehow in an ascending triangle. So we might see continue consolidating. So in order to give us any sign either to the upside or to the downside, we need to either seeing it breaking this trend line that I have just adjust the 50 period moving average, or turning higher, breaking the latest up fractals at 18 1828 territory. So for the time being, sideways, as long as we see a breakout of these immediate support and resistance levels. That was for gold, guys. And if you would need anything about gold, anything further for gold, let me know. So dollar CAD, that was nice. Oil, this is nice because dollar CAD, because oil was to the upside this week as well. Also affected by inflation, by higher inflation, and got a boost. And that's why we've seen dollar CAD also benefiting on the weaker dollar and the strongest Canadian dollar due to the oil boost. So dollar CAD, nice turn. Actually, it's a significant sell off, and thank you for bringing that up, future, because if I get rid of these lines, guys, I don't know whether I mentioned it in the past, but this looks to be like a head and shoulder formation if you have a close look at it. So this looks to be some kind of a neckline, this double fractal over here, this neckline is somewhere here, 126 level, round number as well. So the fact that on Tuesday it broke nearly full body candle close below the 200-day moving average, which also broken the neckline, this head and shoulder neckline, and the next day and the day after it keeps turning lower. This is a confirmation of a head and shoulders formation, which is a bearish signal. Okay, so now the attention is pretty much on the October's territory. Okay, you can see that the momentum has turned aggressively to the downside. Bollinger's extending lower. The asset is below all moving average. So eyes are on the over here October lows. So 123 territory and 122.50. Okay. Thank you for bringing that up, my dear. Future is nice. That's nice. So let me put also the daily background so we could see the momentum indicators. MACD turning lower, RSI at 33 and pointing lower. Parabolics are continue pushing the asset lower. So the attention for dollar CAD now is down to 122 and 123 territory. Intraday now, we had a, let me put also the one on scalping. Okay, here we are. 1 hour chart or 30 minutes chart, up to you. On the US Open, we had a resumption of selling pressure, breaking currently just broken the morning's low at 124.65 and extending lower. We can see the fast moving average starting pointing lower again. So sharply lower, MACD down, stochastic pointing lower. RSI is a bit flat, but we have this big 30 minutes candle, these two consecutive bearish candles, resuming the sell-off for dollar CAD on the back of a weak dollar and a stronger Canadian dollar. So I'm not sure whether I have my pivot points over here. Yeah, I do. Let's check pivot points. Where is it holding right now? So moves below the broken the first support of the day. So the next support of the day is coming at 124.40, and the third support of the day is down to 123.87. Okay, let's move on. Of course, everything is good, Zibusiso. Thank you for asking. So, dollar yen, of course, dollar yen. Let me check a bit the data as well, by the way. PPI headline rose to 0.3%. Energy prices slid at 3.3% decline. Transports and housing, warehousing prices remain robust. So it's a bit of the breakdown of the data. This is what I'm reading out loud. So the PPI today, they presented really small monthly gain, something that is really, really provides some kind of an change print from November 2020. Yeah, that's why we haven't seen dollar reacting significantly. What else? Let me check a bit. What's going on? Um, okay, dollar yen. Yeah, dollar yen it is. So dollar yen. I will start with the daily chart as usual. Okay, my dear. Sorry for shifting from a template to template, but I have different template for daily and different for intraday trading, such as 1 hour and 30 minutes chart. So dollar yen for 6 day to the downside. Okay, I would like to check something. No, let's get it back to 50. So for 6 days in a row to the downside, pressure on the general softness of the dollar, but it was a bit of a risk. The full risk on mode is what actually supported the demand for yen. So, uh, this decline. This decline, it has to do more or less on the once again on the case of buying the rumor and sell the news thing of with inflation. So that's why we have seen the dollar overall to take the inflation report on the chin yesterday, and that remains the case, but has so but this drop, drop of dollar, and as a consequence, the demand of yen, it looks to be appearing to be a case of buying the rumor, selling the news. This is what happened with the dollar. Is it clear, guys? If not, please let me know. So, yeah. So, yeah, dollar yen. So let's get where we're standing right now. We are back to 50-day moving average. So back to 15 of the mid of December territory. So that's nearly 4 weeks lows for dollar yen. And the fact that it aggressively broke the 20-day moving average with parabolics are turning higher is something that suggests that there is further steam to the downside for dollar yen. Okay. So we have seen a bit of a bears being in control. And let me just check whether this is still the case. So turn below 50%, reverse more than 50% of the losses, retest the 50-day moving average, and MACD is still positive but lost some momentum. So what I can see over here from the dollar again is that there is near-term pressure, negative sentiment in the near term, okay, adding pressure to the dollar. So for the time being, the next real support for the asset remains the 114 level, which is a round number, but also the 61.8 Fibonacci level. So that's the next immediate support, key support level for the asset, because it could provide some kind of a floor and a stop on this decline. Because from fundamental perspective, the yen, the fundamentals are in favor of dollar and not of yen. So this is what happened since last week is buying the rumor, selling the news fact. So buying the rumor, and once the Fed was out and US inflation is already released, selling the fact. This is what happened, unfortunately. So this decline from fundamental side, considering that Bank of Japan having its ultra accommodative policy, but on the other side, Fed will tight and already start tightening. Um, the in the long term, the prospect is that dollar yen will continue moving to the upside. For the time being, there is strong pressure. Okay, the candles are quite big. Along with the breakout of 20-day moving average, we might see the asset turning, retesting the round 114 level. Okay, you can see this from the fact that RSI is keeps pointing lower, so there is some steam to the downside still. And MACD also turned below the signal line, indicating the decrease of bullish momentum. Now, intraday, sorry for that. So, intraday, indeed, on the US Open, the asset broken the floor that we had. Remember, fractals or previous lows provide us a nice immediate support level. So, broken ahead of the US Open. So, and extending lower. If I put my scalping setup, you can see that here we are turning lower before the US Open. On the US Open, extended lower, Bollinger's expanded, extending lower, fast MAs pointing lower, my fast MACD lines turning lower, stochastic still pointing lower, RSI the same, so there is further pressure to the downside for dollar yen. Let's see a bit our pivots as well. Okay, it's ready to test its first support of the day, and the second one holds at 113.70. Okay, guys, all good? ZAR, of course, Muzi. So sorry for being a bit late. Okay, it's all about dollar, guys. All about dollar, but we have a nice trend over here. So that's nice. That's nice, Muzi. So what we have over here, we have a continuous decline, an asset being in a down channel since November, broken yesterday and closed outside of my regression channel, and for the time being today hasn't managed to turn back above within the channel. With Actually, I need the daily setup once again. And let's put the regression channel on. Perfect. So broken and close below it. So far today didn't manage to move and turn within the channel. MACD turned negative, but the signal line is still at zero. Bizarrely, the RSI it has flattened. So what we understand from here is that on the daily chart, we don't have a confirmation or something that will imply that, you know what, this was the beginning, this breakout of the channel, that was the beginning of a downtrend. So you need to be a bit patient, dear Muzi, in regards to dollars are in the daily chart, because we need to see either today or the day after or on Friday further extension to the downside for dollar ZAR in order to suggest that it could start a downwards channel, a downwards trend down to October's lows or even September's lows. So it is anyway in a downtrend since November. But what is key is to clarify whether it will continue uh, getting back to the downtrend channel. So having some bounce, some consolidation, some movement within the channel, or whether is the beginning some kind of a sharp sell-off. So it's good to wait for today's closure to see whether it will continue extending lower away from the channel or whether it will return and we might see some near-term bounce to the upside. So you need to wait for this candle to close maybe on Friday as well, but we need to see some kind of a clarity over here in regards to the daily chart. But from the technical perspective, it's still negative bias. So bearish parabolic SAR, asset broken channel, Bollinger's pointing lower as you can see over here, MACD turn negative, RSI is below 50. So in general, there is a bearish outlook for dollar ZAR. Now intraday, sorry, intraday, there is a bit of a swings in a range. So sideways in Asia, rebounded in the European Open, didn't manage to recover, and aggressively back to the downside on the US Open. Big hourly bearish candle, reversing two sessions gains. So it seems that this strong pullback could bring the dollar ZAR in the near term, in the short time frame, back to 1525 level. It's a big candle that the body of it equals to the two previous ones. We've seen a bearish stochastics over here, a bearish cross over here. So we could see it turning and retesting the 1525 level. Let's see the 30 minutes chart. Boom, boom, nearly full body. You see there is no tail over here to the downside. So there is some fresh pressure to the downside in the US Open for ZAR. So hopefully that helped you, dear Muzi. This is what you're asking, I hope. I cannot tell you whether you sell or you buy, or you should close your position, dear Taimur, in regards to cable. But cable had a remarkable week so far, and the whole December actually was December and January was awesome. I mean, it clearly reversed the losses that we have seen in October. So it was a big boost, and then we have continuous extension higher. So in the daily chart, you say that you have a sell position. I'm guessing you have a seller position because you are an intraday trader and not a medium-term trader and not like a long-term trader or something. So because in the medium term daily chart, the asset is clearly in an uptrend, extending higher and higher and higher, and even broken significantly resistance areas such as the 200-day moving average, the 136 level, and right now today, yesterday they today actually the 137 level, and attention is pretty much back to 138.34, which also is the October's double up fractals over here, and also our Bollinger Band. So our next resistance for cable is 138.34, with momentum also support this outlook, the bullish outlook for cable, because we can see MACD up, RSI up, stochastic up, and I cannot really see a pullback. It seems that there is further steep to the upside according to RSI and stochastic. So for the time being, for this week, maybe the next as well, there is steep to the upside with the next resistance level at 136, 38, 34 for cable. So bullish outlook for cable in the medium term. In the short time frame now, in the 1 hour chart or 30 minutes chart, up to you, depending what you're um, trading, we have seen a bit of a ups and downs, so a bit of a pullback in the morning, however sustained the 137 level, rebounded, and turning back to retest the 137.40 again, the high that we have seen previously. So a touch and a break of this level could imply to further extension for cable to break that 137.47 and even retest the second resistance of the day at 137.70. Okay, so you know that the breakout of latest fractals implies to a trigger point. Okay, intraday. Okay, you see stochastic turning up, pointing to a bullish, giving a bullish sign. RSI is about 50, a bit flat, so consolidation in case that it doesn't manage to break the 137.47. So dollar Swiss, of course, like yen, Swiss benefited on the dollar weakness. Okay, it's a risk sensitive asset, it's a safe haven, so it has benefited, especially this week. So we have seen 3 consecutive down strong bearish candles. And that actually, if I zoom out a bit, let me clear a bit this mess. Now it's a bit better. So 3 aggressive big body candles, daily candles, extending lower, and turning our attention in a potential sell-off of dollar Swiss. But for the time being, this is not the case. The outlook remains neutral, because for the last year, okay, actually, let me put the weekly chart so you can see as well. For the last year, we have seen Swiss appreciating, but also entering some kind of a triangle. So it has significantly, okay, it has significantly declined this week and breaking the triangle, but you can see that the momentum is still like neutral. So so there is from the body of the candle, you can understand that there is a lot of bearish momentum still, a lot of further bearish pressure, because also the Bollingers expanded lower. So the next support levels for Swiss will be the not 90, 75 and not 90.15 level, but uh, so yeah, not 90.76 our immediate support level, but the weekly Bollingers are flat and implying to a consolidation. So you need to be a bit careful with Swiss in regards to the medium term, at least outlook, daily and weekly, because regardless of the sell off this week, it's really it looks neutral. So MACD is flat, RSI is close to 50. Bollinger's pointing to the left hand side, suggesting some kind of a consolidation between not 90.50 and 90.35 area. 93.70 area. So we might see the asset consolidating within this range for the next few weeks or even months. Now, I know that because of this sharp sell off, you're interested mainly on the intraday basis, 1 hour chart or even 30-minute chart. So that is clearly bearish. We have seen the asset extending, keep extending lower and lower and lower outside the Bollinger Band areas. Parabolics are negative, MACD aggressively negative. So I cannot really say anything else. Keep extending lower. Even the momentum indicators suggest that there is further steam to the downside. So yeah, it is what it is. Big sell-off on dollar Swiss continues with the asset breaking the first support of the day. So the second support of the day goes down to not 90.56 territory. So put your pivot point on, because it seems that dollar Swiss is is driven by negative bias this week. You see MACD resuming lower, stochastic keep pointing lower even though it's in an oversold territory. RSI keep pointing lower even though it's still in an oversold territory, but this suggests that there is further steam to the downside intraday. Okay, I'm good, Junior. Thank you. Pound yen. So on the strong pound and on the where is it? But yeah. So yeah, it's a bit. This is interesting because what happened over here? We have strong pound, but also because of the risk on situation, we also have a strong yen. That's why this week, regardless of how strong the pound is, the pound yen stuck in a range. Okay, so consolidating in the daily chart. So please put the ceiling of the week and the floor of the week as your immediate support and resistance levels, because the asset for the time being is consolidating. You can see that because also the fast moving average are pointing on the left hand side and they don't give any direction. So consolidating in a daily chart. Intraday, however, you can still trade if you want this consolidation mode. This consolidation mode that we are seeing, because intraday you can there is still a range market is still tradable. So what I mean by that is, let me get rid of the rectangle. So we've seen that the asset stuck since the beginning of January within this range 156 and 157.75. So currently we have seen it yesterday turning away from the upper range, coming into the mid of the range, right? Let me change the color. Coming to the mid of the range, turning back up, and now turning back down again. Two consecutive bearish candles, fast MAs pointing lower, as a bullish one, but not a big one. I mean, not reversing more than 50% of this candle, and again keep turning lower. So what we can see over here is that there is there is some selling pressure as well. But if you're interested on pound yen, guys, you need to, can you see that? Down, 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 30 minutes chart. Held a floor at 156.65, bounce higher, but now is resuming losses. So there is something to the downside again for pound yen, but in the very very short time frame. This is a 30 minutes chart. So considering that our fast moving average are pointing lower, the asset is well below the 20 period moving average. RSI turned back down again. MACD is negative. Over here, stochastic is a bit delay. So okay, we could wait and see a bit, but a turn back to 156.70 and a break of that level, to be more precise, of this 156. Oops, 156.60. It could check a bit. It could turn the attention back to the lower level of the range. But for the time being, we need to see the asset breaking the latest low. Okay, and if that happens, if it did breaks the 156.65, then the next support levels could be seen based on our latest down fractal, so 156.40 and 156 level. So if I put, just out of curiosity, I will put the pivot points on. Okay, it's below the pivot point since the US Open. Yeah, we need to see a break of the latest low in order to suggest that this decline has not run out of steam and is still on. So be a bit patient, Oliviera. Unfortunately, we don't have a French speaker analyst at least, but we do have agents that they speak French. They can help you with anything you need. They can even translate for you some of the things that we are saying. So feel free to contact your agent, dear Mahfoud. Euro dollar sell. I cannot really tell you what to do, but it's all about dollar weakness this week. And Euro dollar has a bearish outlook in the long term indeed, but this week euro dollar has been seen to the upside, breaking 2 month support resistance, moving higher and getting back to 114.70 level. So reversing more than 50% of the losses that we have seen in October. So the next ceiling for euro dollar is 115. And if I put the 1 hour chart, you can see that there is sorry. Okay, here we are. You can see that there is further steam to the upside for euro dollar in the near term. Okay, so next ceiling at 115. So up on European consolidation, up on the US Open, still hasn't break that latest high, but the break of this latest fractal, this latest high over here, this could attract more buyers in euro dollar in the near term. You can see stochastic up, MACD resumes, so it is what it is. And we've said about gold. Gold got a boost, so a boost in the near term on the dollar weakness, but in the long term is under pressure. For the time being, in the 1 hour chart, it has seen a pullback, but we need to see the breakout of this trend line that I put on at 1821. 1820 in order to suggest that there will be a reversal to the downside. As long as this trend line, this 50-day moving average remain intact, the asset remains well supported in the intraday basis. Um, they are the same, okay? MT4, MT5, the same. To be honest, because I started, I started with MT4 when I initially started my working in the forex industry and started trading, etc. I started with MT4. So for the time being, for me, it's a bit difficult to change because I used to I used to MT4 setup, but it's a matter of how you. It's a matter of preferences. MT5 has a lot of automations that you can benefit from. A lot of automations, and also there are plenty of tools. I mean, more than what MT4 has. MT5 has 3 times more indicators than MT4. So what you can do is test it. Test yourself a bit on MT5. It's the same thing, but the difference is that MT5 has a lot of automations and more indicators. But yeah, I could shift to MT5 as well, but I need a bit time to use to it. So that's the only reason that I'm using MT4 and not MT5 for the moment. Okay. So yeah, but they are the same platforms. It's just an upgraded version of MT4. So okay, it's good, dear Junior, yet that you admit that you are in a demo and still failing. That's not bad because you're in demo, right? You're not losing your own money. So try to educate yourself, come here in our analysis, also exchange opinions with other traders if you have friends that they are trading, or over here in our forums. And keep watching our live analysis, keep watching maybe the webinars in order to create a setup, okay, strategy, a trading system that it will be successful for you. Once you manage to find a system that works good for you and you stop failing, but instead you are succeeding in demo account, then at that very moment you can say, okay, I'm ready to go live. I'm ready to go in a live account. It's not bad that you are failing in a demo account. Actually, it's brilliant because you are not risking your money and you want to excellent before risking your own money. So it's good for you that you are admitting it. Keep educating yourself, trying different systems until you find the one that suits you. And I'm sure that you will manage to find a trading strategy that will works for you and you will stop failing. At that very moment, you will be ready to go in a live account. Okay? So that's not bad at all. That's because you need to start with the basics. You need to start with the basics, understanding leverage, marching, what is a PIB, understanding the basics. Please, there is a handout, there is a educational material for free in the website. Start one by one reading, um, uh, and watch as the very beginning the basic webinars, not the advanced, neither the intermediate ones. Start watching the basic webinars first, okay? uh, i don't think I don't think that we are I don't think we are offering the are we? No, we do. I don't think we are offering the Singapore dollar against the yen. We do offering the Singapore dollar against USD dollar, US dollar against Singapore dollar, but I don't think we offer the Singapore dollar against yen. So I'm sorry, Michael, I cannot really reply to it because I don't have the at least to check it from the technical perspective. Um, yeah, fortunately, can't reply because I need to check the technicals behind this cross, and we don't offer it. I don't know whether you're trading in a different platform or not, but I cannot really help you with it because I need to. Um, Yeah, something that we don't offer, but you should have in mind that yen is expected based on the central bank and the ultra accommodative policy and the fact that Japanese economy is expected to not to grow in 2021. Actually, is expected to present a 1% decline in the GDP. Then I don't really see the yen support being supported for 2020, 22. What else? Where are we? Where are we? Ooh, a lot of questions. Pound yen, as we already mentioned, sideways in a daily and medium term basis since it's stuck within 156 and 157.75 level. Intraday, we have seen some pullback, but as long as we don't see the latest low at 156.65 being broken, then this is the only way to suggest that it will turn further to the downside and possibly retest the 156. So for the time being, it found a floor at 156.65. So it's consolidating as long as we don't see a further dip to the downside. We said pound dollar is in a rally for more than a month now, reversing more than 2 months, 3 months losses. So the next ceiling is at 137.70 and 138.35. So strong, well supported. The outlook for pound is well supported intraday as well, but in the daily chart as well. So both intraday and daily outlook remain well positive for cable. Thank you, Shibweb, from your kind comments. Euro pound, of course. Euro pound. It's pound gaining traction, gaining demand against the common currency, right? That's why we have seen a shift to 0.83 territory. I will give you first of all the weekly chart because we can see over here that it has been in a narrow descending channel since March, and it keep extending lower. Okay, so overall the outlook remains to the downside on the amid a strong pound and weak euro. So guys, the Bank of England is expected to increase rates in February, okay, the next month. So this is another thing that supports the pound regardless of Mr. Boris Johnson's scandals. Okay, so for the time being, okay, it has we have seen some kind of support. So the last 7 days is consolidating. So it's good for you to add some trend lines on this range, because a decisive break either to the downside or to the upside away from this range could give us indication for euro pound's next direction. For the time being, is consolidating in the daily chart. A break of 0.32 8320, which is this week's this week's lows, a break below it could open the doors to, come on, here we are, to 83 level, round 83 level, and 8250, which is our lower Bollinger. In case that 8320 breaks, then we could see a shift further to the downside at around 83 or even lower at 8250. Now, if it's rebounded, okay, as long as we don't see a move above this middle line, the mid line of our range, then the outlook remains negative. In order to suggest that the asset will come back up and retest the upper trend line, we need to see a move and a break and a closure above this middle line, similar to what happened over here, over here, over here. You see, every time that it broken the middle line, it was retesting the upper line of the trend line. So as long as soon as we will see a break of the middle line, we might see the asset turning to 0.85 territory. Is that clear? Hopefully it does. Intraday, consolidating, currently rebounded, retested 200 for moving average, turned lower, but the momentum is keep pointing upwards with MACD positive, RSI pointing upwards above 50, stochastic the same, and the fast moving average at the point higher. So it seems that there is another attempt to uh, to uh, to retest this 0.8355 level, but be careful because there is a lot of consolidation today. So yeah, this bounce looks a bit limited. We have seen dollar Swiss. How do you set up a scalping setup, Stephen? We have plenty of webinars with different scalping strategies. So please check them because there are. I have done some. Stuart had done some, and they are different. Check all of them. Check which makes sense to you, and try it in a demo account because there are plenty. I cannot go through right now. Okay, what is I buying the rumor selling the news? What it is? Okay, for the whole 2021, actually since the mid of 2021, we keep saying that U.S. economy is doing great, is recovering in contrast with the other asset, in regards to the other economies. So eventually, the Fed will stop this accommodative policy. U.S. economy is doing the better; it has recovered from the pandemic, and we're saying all this, and we're saying that okay, so Fed will stop accommodative policy and will get the rates back higher again, and so on and so forth. Like we keep saying that because of the good data that we can see in the US economy. And that was why we had seen dollar since the nearly on the since the mid of 2021 getting stronger and stronger and stronger. So before we actually see the Fed taking action, we were buying the rumor. We were buying on the anticipation. We are buying the rumor. So we were saying, okay, buying the dollar because the US economy is doing good, and because of that, the Fed will in the future increase rates. So this means that dollar will get stronger. So we were buying the rumor. We haven't seen yet the Fed increasing rates. If a central bank increase rates, that implies that the currency of that country will become stronger. But it hasn't actually done yet. But we were pricing in it before it happens. Okay, Okay, Chidera. So we were buying the rumor. The markets were jumping in and invest on dollar on the anticipation that soon the Fed will increase rates. So that now that actually Mr. Powell came out on a speech on Thursday, Tuesday, saying that yes, we will proceed this year with rates, especially if the inflation remains high. Now that actually it has said that, and because the next day we indeed had seen inflation rising, and we are now convinced that, yeah, it wasn't really a surprise. It was like, yes, we thought that this will happen. We knew that the Fed will uh, uh, will rate rise. So now the people that they had invested, then they had long positions on dollar, they were selling the news. It means that they decide to take their profits to get out of dollar for the moment, something that caused a decline. So this is a phrase that we use if we price in an event well before it actually happened. But when it actually happened, it's not a surprise anymore. We were expecting it, we were invested on it way before it happened, and now we are closing our long position, so we're selling the news. Okay, it's a phrase that we are using. Hey, Sabine. Ooh, I have single, guys. I keep single. I'm a bit tired. Where is gold? Come on, I had it. Sure, I had it right here. Come on, come on, come on. Here it is. Once again for my friend Shaq. Ooh, what happened? Did I click the wrong? What have I done? What have I done? Where am I? Sorry, guys. Sorry. Mixed a bit my templates over here. Ooh. Gold in a pullback, slight pullback today, but remains well supported from the 50-hour moving average. So if you don't have 50 period moving average, 50 period exponential moving average in your gold, add it, because you can see that it provides some support. So as long as that line remains intact, we don't see a closure of the hourly candle below it, it means that the gold remains supported. Okay, that what can I say about gold? You said 4 hour chart. We have a pullback, but you see there is a bullish cross of 20 above 50 period moving average in the 4 hour chart. The low of the day remains intact. Yeah, it's still supported. The momentum even in the 4 hour chart remains strong. Do you see that? We see that RSI is starting pulling down, but in order to confirm a pullback, we need to see at least, you see, a move back below 1815, because it's the low of the day, but also the 20 period moving average. So have a trend, have a line on, dear Shaq, on the 1815, because a break of it could turn the asset back down to 1800s or even 1780 territory. Okay, so have a trend line on. This is our immediate support level for the day, 1814. Confluence of latest low along with 20 period moving average in this 4 hour chart. So consolidation for the 4 hour chart for the time being, as long as we don't see a break of this level or even a boost to the upside. Daily, the same. It has appreciated significantly, but as long as it remains below the 1835, then we cannot really accept anything rather than consolidation for gold. You see, daily MACD is neutral, RSI muted. We had a nice boost, but we need more for turning the gold neutral outlook into a bullish one. Gold, pound, euro, yen. Guys, I'm running out of steam. I'm tired. Uh, um, I'll check whatever I haven't. I haven't. Oh, nice sell-off. Yeah, that's euro yen since Lecky asked for it. Big sell-off, rebounded, but as you can see in this 1 hour chart, dear Lecky, if you are referring to intraday basis, for the moment this rebound looks limited because the asset remains well below the 20-day moving average, failing to recover. Like the last three sessions is pretty much moving sideways. So it looks that this rebound has been a bit limited. So it put only a shift. Sorry, we need to see the asset coming at 131.16 and breaking it in order to retest again the 131.45 level. So keep an eye on this line, and on the downside, keep an eye on the that's my 200 period moving average, because a bearish hourly candle below that level could resume the sell-off again. Guys, I will call it a day. I replied to regards to gold and cable questions. There are plenty of questions. Fundamental support cable for the moment. You keep asking about cable. So it is what it is. It remains well supported. There is not a sign of a pullback yet. Okay? I'm analyzing both, Emma, because there are people that they like trade in a daily chart. There are people that they trade in a 1 hour chart and 30-minute chart. If you notice, I am trying to analyze both. That's why I'm saying short term, near term, medium term, etc. In regards to cable, guys, because you keep asking, is it a good idea to counter trade when price is? That depends on your risk and reward. If you're gonna double ATR, then put your stop loss appropriately. Okay, it's fair enough to set as a target 2 times the ATR, but try to use risk and reward about 1 to 2 or 1 to 3. So it's about stop loss. It's okay if you want to use a double ATR, but you need an appropriate stop loss as well. Okay. I don't know your setup. I cannot really advise, but fair enough. But set your stop loss in an appropriate place if you're gonna have a target that is twice the ATR. Guys, unfortunately, I will call it a day. I replied to most of the questions. Cable remains aggressively strong. The only thing that could stop him, it could be that barrier at 138.32. But for the time being, everything from the technical perspective suggests a bullish outlook. Intraday, We might see some intraday pullbacks, but like this one, like this one, like this one, but that have been pullbacks, intraday, small correction on this upwards trend. Okay. Uh, so I will call it a day, guys. I'm afraid. Okay. You keep asking questions. I know that. Okay, cat yen. Cat yen consolidating in this 1 hour chart, Michael. So keep an eye, set your trend lines on the Bollingers this time, as I can see. Yeah, it's entering consolidation mode. The Bollingers have flattened. So consolidating. MACD is neutral. So it's consolidating, I'm afraid. There is not a clear direction intraday, but the daily chart, oh, it's the same. It's in an uptrend, but for the time being, it was consolidating since December. So this might be just a correction for the moment. So if it breaks the 9180, if it has a daily candle above, closing above 9180, then the next resistance is coming up to October highs. Intraday now, you need to exit this range either to the upside or to the downside in order to identify direction. A break outside this level, above this level, could retest 9220 level. If it shifts down and break the 9150, we could see it retesting this 200-day moving average at 9150. Dollar ZAR could decline further down, as I said. It was in a sell-off the last 2 weeks, and it could retest the 1514. I cannot really say where is it going, how long, how down will it go, but because we need to see whether it will manage to break or not the 200-day moving average. But if it breaks it, then it's like a free fall down to October's lows. Okay, but we need to see decisive break of that level. Gold is not expected to move. It has a key resistance at 1835. So that's a key resistance, 1835. Only if it breaks 1835, it could retest 1850 and 1860 territory. But this looks a bit unlikely, okay? There is a lot of pressure on gold. Guys, I'm sorry, I will call it a date. We are 1 hour and a half live. I know that I haven't replied to many of you, but think about the near-term weakness of dollar. So you're asking me about Aussie dollar, you're asking me about gold. All the things that you ask, the most of the things that you ask are dollar crosses. So think about the dollar weakness. Think about what you see in your charts. Okay, they are correlated. So everything that we covered correlated. So yeah, Australian dollar benefited on the weakness of dollar. That's why we have seen this boost higher. Okay, so next resistance area for Aussie is 40 pips higher. This confluence between the upper Bollinger and the 200 moving average. So this is a key resistance for Aussie. Thank you very much. Hope you are having a great day ahead. I need to call it a date. And we're gonna probably do another live within the week. Hopefully, I will manage to do one tomorrow. Not sure about it. I cannot promise, but we are here to help anyway. So you can contact us via social media, email address, Instagram. So we're here for anything you need. Feel free to let us know. Ask for help. Thank you very much for attending. Hope you're having a great day ahead and take care. See you. Bye bye.